Fellas, it has been a bad month for my long-term portfolio. But the real question you need to ask yourself in this time of frustration, depression, and agony is, do we really care?
We do not care.
Today, whenever stocks go down or the S&P 500 goes down, everybody likes to suddenly panic, call great companies bad, and really, overall, not act like real man's investors. And while a lot of money may have been taken out of our bank account this month, something that's not taken away from us was that inner dog in us as investors. We actually want stocks to go down when especially they're great businesses. And this month, there was not a shortage of dips. So today, as per usual, every single month, I will be sharing my new buys, sells, dividends received, some of the lessons that I've learned this month, and so much more. And with some of the losses this month, I am pretty close to working in a McDonald's for the rest of my life. So if you want to have me keep making these videos, make sure to check out becoming a channel member. Shout out to my current channel members, Redwood and Major Speed. You guys really put a lot of pressure off my soldiers with the volatility of my portfolio and Google AdSense. Alright, but in all seriousness, it's a great way to support the channel. You get early access to every single video and my undivided love and attention. Let's get on to the video though.
Hello, I like money.
As per usual, I'll be sharing some of the characteristics that I look for in my businesses. First of all, free cash flow. We want businesses that are free cash flow positive or generally over time have their free cash flow grow at a really solid rate. Free cash flow is the most important metric looking at financially any business. 2, logical shareholder returns, choosing good times to buy back shares and over time rewarding shareholders through buybacks and dividends. 3, a fair/undervalued asset. We don't want to overpay for even the best company. 4, strong qualitative measures. These are things that you can't find on a balance sheet like brand value, pricing power, and more. And 5, great management. Management that you don't go to bed every night a little scared of. And great management, we might have a question mark on this one for some of our companies this month. Currently, my portfolio value is sitting at $22,533.97. That is down from last month where we're sitting around $23,400. Thank you, Starbucks. But in all seriousness, I really don't care whatsoever about short-term portfolio value or short-term performance. Over the long term, I've said continuously on this channel, I plan on these great holdings and great businesses just compound over time, let the dividends reinvest themselves, and I think I will get a very good return compared to the S&P 500. But that is not going to be showing in the short term with some of the stuff that's happening in my businesses right now. I have been consolidating my portfolio, but I think it has gotten leaner over time, and I don't plan to sell as much stuff. Unlike some other channels, I don't shit myself when I underperform the S&P 500 in the month of May. I don't like looking at year-to-date performance. I don't like looking at 1-year performance, 2-year performance, or even 5-year performance. 10-year performance is really the lowest that I'd ever go, but I like to look on a long-term time horizon. Currently, out of my portfolio, I have about $1,150 in capital. Now, this was funded by a recent sell-off that happened in the month of May, technically. So you're going to either have to join the Discord or follow my Twitter, both links in the description, or you could wait till next month. But my capital was definitely dwindling this month, and it got me a little scared, especially when stocks started falling, because I'd love to buy stocks on declines if you didn't know already. My portfolio is currently up 11% all time. Now, since my account just transferred into Schwab, there's not a whole lot of data, but looking at performance from pretty much May of last year to May 1st of this year, I am underperforming the S&P 500, which I'm fine with. I'm going to share why. I currently have an 8.21% return on my portfolio since May 31st of last year, and the S&P 500 has gone up 21% since then. Now, why am I not shitting myself right now? Why am I not nervous selling out of my entire portfolio? Well, number one, it's 1 year. I really don't care. I'm investing for decades. But I think the S&P 500's returns are really being inflated by just a few companies like Nvidia right now, Tesla, and more. And while it sucks to see that you're underperforming the S&P 500 technically, you got to keep in mind it's a long-term game. Your core positions are going to compound still, and there's no guarantee that some of these companies like Nvidia, Tesla, and more are going to continue outperforming SPY, and their cash flows are going to back up the performance that the prices had. It's really no guarantee. One could even make the argument we're in a bubble right now. I also do have some holdings that are kind of lagging my portfolio behind that I will talk about today, but I'm not worried whatsoever. This is the kind of transparency some people will not show on their channel. And when you actually have your own investing style, thesis, and don't copy other people's portfolios and trades, you can sometimes see some underperformance in the short term. Alright, I want to thank the sponsor of today's video, the Delta app by eToro. Delta is the app that I personally use to track all of my stocks so I know firsthand whenever one of my favorite stocks is on a dip or up for the day. It's perfect for me personally because I can open it up at school. Immediately, I see the companies that are on up or down for the day, and I know immediately what stocks that I want to go buy from there. There's no better adrenaline rush than seeing one of your favorite companies in red for the day. And I know mainly on this channel that we cover stocks, but if you're into crypto, NFTs, or any of that kind of stuff, you can also track it there as well. So there's a large variety of stuff that you're available to track there. This is 100% free too, which is one of the huge reasons that I'm partnering with them. All you got to do is use my code in the description box. You can download it 100% free. This is an investment tracker, not a brokerage. You're not buying stocks on here. But if you do want to connect your brokerage to Delta, you can do that and track your portfolio. It's way easier than manually doing it. Thank you to Delta once again for sponsoring today's video. Alright fellas, let's get into the transactions, the buys and sells this month. It was a very, very active month in terms of portfolio reconstruction and adding new holdings. To start off, I put $50 into Apple at $169.91. Apple recently just reported earnings this week and they beat. It was a good earnings quarter and they are trading at $185 right now, and it appears that dip may be gone for now. I thought it was fair price. Apple's an awesome business, and I think there is some negative sentiment regarding the company right now. Some people say they just aren't innovating anymore. They spend too much time on the EV project, but Apple's such an awesome business. It's a core holding of mine, and I planned for it to be in a long, long period of time. I thought 169 was about fair price. I think with the way that they've grown their cash flows the last few years, Buffett was buying in the 150s. I think it's relatively same value as then. Then I put $50 into Nike at $92.13. Now it's kind of a point in my Nike position. I'm doubling down or nothing. I first started my Nike position when I didn't know much about investing and I overpaid for the company at $140 a share. Now it's at $90 a share. Nothing's really changed with the business qualitatively except that they're not going direct to consumer anymore. They're still going to be the middlemen. People are not happy about that, and Nike has been trading on a discount recently. I think anywhere below $90 is a really solid price for Nike. So I will continue to add if it hits 88. I also picked some up there, which I'll discuss later. Then I put $130 at the beginning of the month into Starbucks at $90.08. I think long term that's fair value, but it's not looking good right now. Then I sold 6.8 shares of Coca-Cola, which was my entire position, at a 7% gain, and I got $416 in capital from that. Coca-Cola, I just didn't envision myself adding any more, and I figured I could put the capital into good use and have it grow in my core holdings right now. There's just not much reason for me to be owning Coca-Cola. Then I put some of that money from Coca-Cola. I put $100 that in Union Pacific at $241.71. One of my core holdings that I want to build up, and I thought it was a fair price. I put $100 more into Apple at $168.94. Solid price there. $75 into Costco. That's going to be unpopular, but it's $712. They fell a little bit after earnings. Definitely not the greatest price to buy, but I think Costco is one of those businesses. If you're going to be holding it for 30, 40 years, you can kind of buy any time and get away with it. Maybe a little bit of an overpay there, but I will definitely be buying more on the dip. Then I put $100 more into Starbucks combined when it went below $90 at $89.73 and $88.23. I put $30 more into Nike at $89.11. Solid price there. I think it's recovered a bit since then, but once again, anything below like 88, 86, I will be buying for sure. I'm going to get my cost for sure down on Nike, and I'm continuing to do that below $90. Then I put $50 more into Starbucks at $87.09. The Starbucks buys now are going to be coming in the May portfolio update, so subscribe, turn on post notifications for that, because I'm sure we are only 4 days into May, and we are going to be buying a lot of Starbucks this month, I believe. Then I bought 6 shares of Vici at $28.21. I think that's a solid price. I have a fair price at Vici, around $33, $35. Then I put $35 more into Starbucks at $86. $30 more at $84, and $50 more at $85. That's rough looking at it now, I'll be honest. Long term though, I still believe this is going to be a good buy. Just got to be patient with it, honestly. I put $40 more into Vici at $27.95. And lastly, I added to my SHG position at $86.97 on a big red day. So I think that's my plan at SHG as well. I'm going to continue adding on red days. There's no crazy rush to build that position up. Alright, so this is where I think I may have went wrong this month with my Starbucks buys. See, when we're in a bull market, I've talked about this on Cash Flow Kings, but I believe in a bull market, you're a lot more enticed to buy stocks. You want to buy stocks. You're a lot less patient, in my opinion. And when you're real man's investors, you love buying companies on dips. And I think Starbucks, it was on a dip, but it wasn't on like a crazy dip like it's on right now. And I may have gotten a little impatient, and I think that's something I'm going to learn from. I didn't think it was impossible that it would go to $75. I didn't think it was likely. And that's made me a lot more patient, I think, as an investor, and you're going to see that going forward. But I still do believe those Starbucks buys in the mid 80s and high 80s. I think long term they'll still pay out fine, but it doesn't look good right now, I'll be honest. So I'm definitely being a lot more conservative with my buying. As of Starbucks right now, I'm seeing where it averages out. I've already bought some in the month of May. Another thing that also kind of got me worried as well is we started seeing a real kind of downfall in the market, and my cash supply was dwindled through. I bought pretty heavy in this month, and that's something that I don't want. I'm going to be a lot more conservative with my buying opportunities and trying to be more patient. My cash position got down to like $600 the other day, and that's nerve wracking when Starbucks is falling like that. I want to take advantage of that dip. So I did sell something off. You're going to have to wait for it. You know already if you're in the Discord. I want to keep my cash position above $1,000. So that's something I'm definitely going to be focusing a lot on and paying a lot more attention to, because I feel like I just ripped through a couple of $100 in a day and I was suddenly at like 600, and that got me nervous, especially seeing Starbucks fall. Let's take a look at our dividends for the month of April. And April's typically not a good month, but it's actually really building up fast. A few of my core holdings that I've been really building up actually pay in April now, and April's definitely grown. Those, April, July months, they've actually been growing a lot. So to start off, we got $13.65 from Altria, which I was happy to reinvest at $43.91. Altria is a company right now, it's been just kind of trading flat, and I think their buybacks are going to be very accretive to their business. But happy to get that dividend from Altria, a pretty juicy dividend, and reinvest it at what I believe is an undervalued price. Then I got a whopping 43 cents in interest from Schwab. Thanks. Then I got $4.33 from Realty Income, which I reinvested back at $51.85, which is a pretty low price in my opinion. Realty Income's actually been climbing up in price recently, and if it hits the high 50s, I'm definitely going to be trimming. Realty Income's a company I'm going to be looking to sell out of eventually. It just doesn't make sense for me really to sell out right now in such a high interest rate environment. I bought Realty Income for the long term. I don't think it's a company I'm going to be holding for the long term, but it is a company that I'm smart enough to know it's stupid to sell at this price. The interest rates are too high. The only way I would sell out of it if it doesn't recover back in price, if I saw crazy opportunity cost where I'd have to sell. Like if Starbucks got to $60 or $50, I would probably sell Realty Income and reallocate it there. But move over Realty Income, it's your much hotter sister in Vici Properties. Vici paid out one of my largest dividends at $24.66, which I reinvested back almost at a full share. That Vici dividend has been growing, and I think only in July it's going to pay out a lot more as well with some of the recent ads that I've done to it. Then I got a whopping 48 cents from Nike. Thanks. Then I got $3.34 for my last ever Coca-Cola dividend. Thank you for your service. And $4.03 from Union Pacific, which I reinvested. So for the month of April, I got $50.92, which is a high for that dividend paying month. Awesome to see, but I also think that I reinvested my dividends at really good and appealing prices as well, especially those Altria, Vici, and Realty Income. And we can see over time of how the dividend snowball is rolling. I think you're going to see this chart be a lot more consistent as I have found my core holdings and I have continued adding to them. I think there's only a few more positions that I'm thinking of selling out of in the portfolio, and then we will be set. I don't want to be like some people and sell out of my holdings like every 2.5 years because they were underperforming SPY over the last 5 years. I buy these companies and I plan to hold for 20, 30, 40 years, and I want to buy more on dips. If you appreciate that, you agree with it, let me know in the comment section. Smash the like button for me, subscribe, and of course, thank you all for watching, and do dividends, stocks, not drugs. Have a good one.